Welcome back to Markets at Noon, and it's time for a corporate conversation now. Let's get into a conversation with the management of, you have Fractal Analytics. Mr. Srikanth Velamakanni, the co-founder and CEO of Fractal Analytics, is joining us on the show. Mr. Srikanth, good afternoon, and thanks for your time. You know, lots of brokerage initiations coming in on the company, very strong outlook by some of the brokerage firms, but share with us firsthand. You have strong growth visibility, but lower margins versus peers. What will it take for you to deliver both growth and profitability simultaneously? What is the outlook on margins?
I think first question to ask here is who are our peers? We don't consider the regular IT services companies as our peers. We're an AI company, and we see a very different industry out there. At this point of time, we think this is an unprecedented, once in a lifetime opportunity to help companies reimagine their business and lead an AI-led business transformation inside their companies. So that is a big opportunity that Fractal is chasing. Number two is a little bit more like what traditional tech services companies will do, which is to help companies reimagine their tech spends with AI. Now, AI is also compressing traditional tech. So can we use AI to reduce the overall complexity and the size of technology projects in such a way that it creates many more opportunities? So that's the second big thing we are chasing. And the third thing is that in a world which is changing so rapidly with AI, companies will have to reimagine how they work and how their workforce should be organized. So that creates an amazing opportunity to help companies accomplish this transformation as well as upskill their workforce. So this is the overall.
Right, so that's as far as your business is concerned, but how much of this growth will be driven by Agentic AI versus traditional analytic services for you? And how is Agentic translating into higher deal sizes or better pricing power for your company?
So firstly, let me explain how Agentic AI is different from traditional analytic services. The basic problems that any company tries to solve, the companies that we serve, they try to solve, are the same, which is how do I grow my business very, very well? How do I understand my customers better? How do I create greater operational effectiveness and reduce inefficiencies in my business? And how do I stay relevant in the future? How do I build new products and services to stay relevant in the future? Now, these are the fundamental business questions that Fractal tries to answer through AI. Now, traditionally, the techniques for doing that were traditional analytics previously, which meant we would predict something. We would predict how is the customer likely to default on your loans, or whether this customer will respond to that offer. How should I split my marketing spends more in a more optimized way so that I can grow my revenues better? These are the kinds of questions that Fractal has traditionally been answering. Now, this now can be done with better AI and better agentic AI. The agentic AI essentially means that the AI or the agents that are part of this AI are autonomous or they have agency. That's why they're called agentic. That means that they can take a complex problem, divide that into smaller problems, plan around it, execute, learn from feedback. That's the new agentic AI. Now, what you see is that almost everything that we do will now have an agentic layer on top of that. That is a big transition that.
Okay, so point taken. But also talk to us, given everything that's happening geopolitically and the way the macro environment is shaping up, are you seeing any client-specific stress or slowdown in decision-making currently, and how resilient is the demand for data and analytics in a weak macro environment?
See, one thing you have to see is that eventually macroeconomics, geopolitical concerns do play a role in everything, in the sense that if there's a war going on and you're a Middle Eastern airline, you're going to see some cancellation of flights, which means that your revenues are going to be affected, which affects your budgets and so on. Or if you see trade headwinds, companies are going to slow down because they are uncertain where to ship goods from, how much it'll cost, and then what to charge the consumers. These kinds of uncertainties slow a company down in decision making. That's going to happen in general. The flip side to this, or the other side of this, is that there's tremendous appetite right now to use AI, to use enterprise AI in order to drive my performance. And this need to drive fantastic performance goes up in a more challenging environment. So we see these two things always playing with each other. And the net result is that there is significant category expansion, market expansion that we are seeing even in a challenging macroeconomic geopolitical environment.
Also wanted your thoughts on losses in Fractal Alpha, which remain a key risk for the company. When do you expect this business to turn profitable for you, and how much incremental investment will be required for this part of your business?
So Fractal Alpha, there are two things I would say. First, Fractal's overall profitability has to be adjusted for A, Fractal Alpha is still not breaking even. And two, we have an associate company called qure.ai, Qure.ai. Now, qure.ai has had a relatively tough year because USAID, which funds a lot of the TB programs around the world, was completely shut down by the Trump administration after the Doge program kicked in last year. So that created some headwinds for the qure.ai business, but it is beginning to take off really nicely as we speak. So qure.ai is an associate company. We own 31% of the company. So we don't count their revenues, but we do take our share of their losses. So that is one of the things, that line items in our profitability that has been significantly high for this fiscal year will be much lower in the coming fiscal year. That's number one. Now, coming to alpha companies, these are companies that Fractal owns either 100% or close to 100% ownership, which are meant to build AI businesses. One of them is Asper.ai, which is a revenue growth management business. Essentially, what Asper does is to drive revenue growth inside big companies by helping them manage their trade spends much more effectively. So if I'm a CPG or a consumer goods company or an FMCG company with 100 billion in revenue, I'm spending something like 20 billion in trade spends. Now, if I can intelligently spend those 20 billion, I will grow my category better. I will make higher revenue growth and also make higher profits.
Okay, and lastly, Mr. Srikanth, talk to us about the revenue spent on R&D that right now is 5 to 7% of your overall revenue. How do you measure the return on investment on these investments that you make into the business? And do you expect the R&D intensity to sustain, or will it moderate as AI platforms now take scale?
Yes, we expect the R&D intensity to remain at that level or go up. That is the intention, because AI is changing the world in a very significant way, very rapidly. In such an environment, we think the moat really for Fractal is to be the most innovative AI company out there. So, and this R&D spend really helps us there. Now, how is the R&D spends managed and how is it generating returns for us? Number one, we are putting our R&D spends to work for improving the Fractal.ai business. So one of the things that Fractal does a lot with companies is to use data science in order to predict, understand customers, etc. So a lot of the data science work is now automated with AI agents. So Fractal's AI research team has built a system called PyEvolve, which is an automated way of doing machine learning and doing data science. It is extremely flexible. It is doing an amazing job, and it will augment our Fractal.ai business in a significant way, driving higher growth and higher profitability. So that's the way PyEvolve is working to improve our Fractal.ai business.
Mr. Srikanth, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the growth roadmap for the company looks like. Thanks so much for joining us today.